Hello, I'm Bernard Hickey from interest.co.nz and welcome to another of our double shot interviews where we do our weekly look at the currencies world. We call it Never a Dull Moment with Dan Bell from HiFX.
Hey Bernard.
Welcome back, Dan. Another action-packed week, as we say. Greece, all about Greece. Now, in the last couple of days, we've seen the Greek Parliament vote through an austerity plan and markets seem a bit more relaxed now. What's been the key drivers in the last week or so?
Yeah, so the Greeks. I mean, it was really make or break time for the Greeks. They had two votes this week in their parliament, and it passed the austerity measures that have been asked of them from the policymakers that are giving them an extra $12 billion to help them pay their debts in the short term. So markets are a lot more stable following that. And in fact, in the last sort of 48 hours, we've seen quite a big sort of risk-on event with equity markets, commodities, currencies all sort of pushing higher.
And it's not just the parliamentary action. The Greek and the French banks look to be agreeing on a rollover of Greek debt, which is helping people.
Yeah, that's right. So there's the whole idea about a private sector participation and extending the Greek debt has been on the table as well over the last 2 weeks. So in the background, you've got the French banks and the German banks essentially saying that, yep, we're going to, provide some kind of extension. So sort of softening the short-term blow and extending it out. So it's the old blend and extend scenario, or blend and pretend, as you like to call it. But so for the time being, I think that's also seen as a positive. But in the background, I wonder what the credit rating agencies are thinking about that.
Because that's the key. If they decide that this extend and pretend, blend and extend and pretend is actually a default, then nothing will have been achieved. We still have the financial crisis that the ECB and others have warned about.
Yeah, well, that's right. And, it does seem like the market sort of attention span at the moment is sort of quite focused on the main headlines that come out over a sort of 8-hour period. So we've seen these sort of positive headlines over the last couple of days. Investors are feeling a bit more upbeat. The euro's, pushed up from sort of the low 140s over 145, and suddenly we're focusing on the ECB and interest rate differentials again. So a pretty sort of mixed, in my opinion anyway, still a mixed outlook for the Greece situation. But for the time being, it seems like they've got a bit of an impasse.
Because in the long run, a couple of years out, Greece still looks like it's going to have to default or do something.
Well, the bottom line is that the Greece situation, they're still, over 5%, 5% deficit on their spending, right? And they've got an economy which is in the doldrums. So, they're still spending more than what they take in tax. And then also, I think the other big issue to watch out for in Greece is that, we've seen that the opposition party in Greece have put a bit of pressure on the current government. And if we see a change in government in Greece, which is potentially likely over the next year or two, things could change dramatically as far as what they think about the austerity measures and the like. So, still a lot of risks associated with Greece.
Now, because people are more relaxed about Greece, at least for now, the New Zealand dollar and the Australian dollar has risen quite strongly as we see this risk-on trade, up to 83 point something, a new record high, and also up to a record high against the pound. How's the New Zealand dollar shaped up this week?
Yeah, pretty good. We've been one of the top performing currencies this week. Well, on a trade weighted basis, we pushed up to a 3-year high over the last 24 hours, around 71.50. Against the US dollar, we pushed up to a new post float high of just under 83.20. Against the Aussie dollar, we're up at almost 77.50, and against the pound, another post-float high there of just under 51.80. So very, very strong. We had a better than expected business confidence number yesterday, and in general, I think you've seen investors looking at New Zealand in a more positive light with the broader sort of macro backdrop, expectations that the Christchurch rebuild is going to add some momentum to our economy, and obviously the World Cup this year. So.
And the trade weighted index up to a 3-year high of over 71. Do you think the Reserve Bank would look again at intervening?
Well, it's a tricky one, isn't it? You go back to the last time they intervened, the TWI was much higher, and he has repeatedly said that really intervention is not the preferred option. So there seems to be, I think, an ideological element to the decision there, and I think fundamentally, given that we're a small country, we don't really have the firepower to control the destiny of our currency, unfortunately. I mean, I think symbolically it would be a big gesture, but I still question what broader impact it would have on the overall direction of the New Zealand dollar.
Looking ahead to next week, the European Central Bank makes a decision. We've also got one from the Reserve Bank. What are those two central banks looking at?
The Reserve Bank of Australia announced their interest rates on Tuesday afternoon. Not expecting any change there, but their central bankers have been preparing the market for a rate hike. Recent sort of rhetoric from the governor and the deputy governor over there has suggested that it's really just a matter of timing. So we're watching the statement on Tuesday afternoon there. From the European Central Bank, they're expected to raise interest rates on Thursday. The ECB have pretty much given markets the clear sort of guidance that they will be hiking rates. So they're going to do that on Thursday night.
Tough for the Southern Europeans, though, isn't it?
Well, it is. At the end of the day, in a way, sort of the ECB and particularly Trichet, he seems to be very much focused on the core sort of European economies, as far as the rhetoric around monetary policy, etc. So, for now, price stability is expected to be his focus, and he's prepared to hike interest rates until he feels that inflation's under control.
You used that code word of strong vigilance, which everyone assumed meant an increase in rates. Across the other side of the Atlantic, the US Federal Reserve has its code words, which is rates at a very low level for an extended period. We've seen the quantitative easing program finish this week on Thursday.
Right.
What are people talking about in terms of QE3, maybe an increase in US interest rates? What's the story?
Yeah, I think the broad conclusion at this stage is that we're not going to see QE3. I don't think, I think for the time being anyway, Bernanke and the FOMC are going to be happy just keeping interest rates, as you said, lower for an extended period. I mean, interest rates are still effectively, 0 to 0.25% in the States. But I think as we get closer to, the further sort of news that the US economy is starting to pick up, hopefully, and that needs to be confirmed from the employment, the labour market employment sector. That's where we're going to start, second guessing what the Fed are going to do next.
That will be crucial, those jobs numbers towards the end of next week. What's actually happening with the US economy? Yeah,
the employment is going to be key for the US, and I think we've got the employment data released next week, the non-farm payrolls, which are expected to come in about 100 to 150,000 new jobs for the month of June. And unemployment is expected to drop slightly to about 9%. And with the soft run of economic data that we've had in the second quarter out of the States, we need to see the employment situation start to improve, and obviously, it hasn't really been, been doing so lately. So that's going to be key going forward.
Fantastic. Around the world in 10 minutes, cheaper the price here on interest.co.nz, and never a dull moment with Dan Bell from HiFX. I'm Bernard Hickey from interest.co.nz. That was another in our series of double shot interviews.